G'day everybody, James from mrkts.com.au here, and today we are very lucky to be joined by Mr. Trent McIntyre from the ANZ Mobile Lending Gold Coast branch. Trent has had 7 to 8 years in the finance industry and in the lending industry, and we're very pleased to have him here to talk about his experience. Thanks for coming in, Trent.
Thanks for having me.
Mate, let's start from the start, I guess. If you could, we try and do a little bit of an introduction on people so you have an idea of their past. So could you give us your CV and
Yeah, certainly. So I finished high school, I think it was 2013, studied over at Merrimack High. So I was more sport orientated. So I chose the football path over obviously academics.
Yeah.
When that backfired, I got into a trade. So I'd done a bit of construction background, finished my Cert 3 in construction, and then took off for a couple of years and went travelling.
Yeah, so beautiful.
Travelled all of Europe and done all that stuff with my mates, and then realised I should probably come home and settle down and try and get stuck into a career. So here I am, mobile lending, been with ANZ now for 7 8 years. I was very green in finance when I started, back when I think it was 23, 24. So I haven't looked back ever since then. It's a great opportunity. The business is great. Love getting out and meeting new people and helping people with their finance goals.
Excellent.
So it's great.
Fantastic. So there are a whole lot of different loans out there.
Correct.
And understanding that a mobile lender is not a mortgage broker, I just want to clarify that early.
Correct, yeah.
So the difference is your specialty is in the lending of money and different facilities to make it possible for individuals.
Yeah, spot on.
Okay.
Yeah. So yeah, with us, we're independently owned. With ANZ, it's a franchise model.
Yep.
So yeah, we are self-employed. So we are driven to help clients and whatnot. Difference to brokers is brokers will obviously go out and source you the best deal, or that's on the market. You might be rate driven, or there might be a certain product you're after. Whereas ANZ, we've got our standard policies, procedures, and we do it directly with ANZ.
Okay.
The good thing about us mobile lenders as well is we do get direct access with our assessment department. So we're always workshopping deals and whatnot, trying to get deals over the line, and our assessment department is pretty good in that aspect.
Yeah. So your core business is facilities and products for ANZ as the bank, but
Correct.
Working privately and independently
Correct.
of that.
Yep.
Whereas a mortgage broker would be more defined as someone who shops the whole market and looks at all of the options from other lenders and tries to get the best deal.
The best deal for the client, yeah, exactly right.
Let's talk about, we've made a couple of notes here, so a couple of different types of loans and the benefits and drawbacks of those loans.
Yep.
So I thought we'd try and discuss those.
Yep.
And let's start with the standard variable rate. So we'll do a little explanation of what it is, and then try and talk about the drawbacks.
Yeah, perfect. Yeah, no worries. So, variable rate, offers more flexibility than your normal fixed rate home loan. So, you can obviously make additional repayments without being restricted whilst you're in a fixed rate, term, and you do have the options of making bulk reductions off your loan at no extra cost.
Okay.
So, it's really good if you want to make those additional repayments, build up a redraw feature and whatnot, because you can then access your cash when need be, whereas you're typically restricted when it comes to fixed rate home loans and doing that. So offers more flexibility around repayments and whatnot.
Okay, fantastic. And then a fixed rate then, what is a fixed rate?
Yeah, so a fixed rate is generally good for someone who likes to stick to a budget each week. So, if you fix in for a couple of years, your repayment's going to remain the same over that term. Okay, so if compared to a variable rate, if your rates increase, your repayments are going to increase. If they decrease, great, because obviously going to build up more of a redraw feature. You're going to have more cash in the bank, etc. Whereas so the fixed rates, you can have terms up to 10 years.
Yep.
Okay, so ideally you probably don't want to fix in for 10 years because if you do, the rates are slightly higher, and you're probably going to get penalised down the track if you break that loan early. So probably best to set a financial goal over a certain term and try and stick to that. There is another feature, you can obviously split your loan, have a portion fixed, portion variable.
Yeah.
That way you get the best of both worlds.
Is there a name for that?
Yeah, you can set that up under one of our packages. Okay. So generally, when you split your loan, you get the benefits of everything. So you can fix in, you can have a variable portion, you can have your redraws. You got everything.
So fixed is for those disciplined people who know what their income's going to be each week and they've budgeted it out.
Yeah, correct.
I suppose it can be for anybody, but
Yep.
it just gives you more clarity going forward.
Correct.
But variable is slightly more of a gamble in the sense that if interest rates go down and the banks choose to pass it on, then your rate may go down,
100%.
or it'll go up depending on what the market conditions are.
Correct. Yep.
Okay, excellent. So then interest-only loans. I know that if you read any newspapers, which a lot of our members read a lot,
Yep.
interest-only is a conversation that's come up quite a bit as loans that aren't being offered very much anymore.
Correct. It is, it is for the homeowner. Generally, assessment might ask a few more questions in regards to why are you having why is this your principal place of residence and you've got interest-only repayments. One reason might be is you're saving for a holiday or whatnot, or generally interest-only repayments would more benefit the investor, because obviously there's tax reasons and accounting reasons that you can obviously claim the interest and whatnot. That's more suited for that investor.
Okay.
When it's a homeowner occupier, it's probably a bit different. You probably would want to pay your loan off because it's only going to cost you more interest in the long run.
Okay.
So potentially pay off your loan a lot longer.
So interest only being in the name, and it's not as tricky. Sometimes it's all in the name. So interest only just means you're not paying the additional principal. You're just doing interest payments, and it's going to be a higher interest rate.
Yeah.
Will they fluctuate?
Okay. Yeah. If it's
They
variable.
can?
Yeah.
Variable.
So you can have interest only on a fixed rate, but the terms need to match. So if you're 2 years fixed, for example, 2 years interest only.
Okay.
Okay. Keeping in mind, if you take a 3-year interest only term, come the end of that 3-year term, your loan term repayments kick in at a 27-year term, because you've actually set out to start with a 30-year term. You've got 30 years to pay off your loan, but you've decided to take 3 years interest only. So then your repayments going to kick in from 27 years onwards. So your repayments could increase significantly. Okay, so best to again set goals, financial goals down the track, and set a plan.
We're all about setting goals.
Correct.
It's very important, and doing your research, which is another thing. So always looking at what the other options are, and then finding what suits you best.
Exactly.
All right, offset home loans, another one I wrote down.
Yeah, offset's generally good if if you've got savings put aside. Well, seeing your savings in your offset accounts, obviously going to offset the interest that's charged to the home loan. Okay, so for example, if you've got a $300,000 loan and you've got 50 grand sitting in your offset, well, each month you're only going to get charged interest on 250, not the full 300.
Okay.
So benefits you that way. So your savings is actually offsetting your interest payable on your loan. No different to a redraw facility. So if you've got 50 grand in savings, your loan's 300, you can throw that your savings straight off the home loan, have full access to it later on, and then interest is still going to be charged to the 250, not the 300.
Okay, so the 50 that you've got saved, so your cash, it's the ability for the bank then to utilise that, because they don't just put money in a vault anymore, it goes and circulates in the markets. And by doing that, they benefit you by only having to pay interest on the money that isn't yours, essentially.
Correct.
Okay, but then can you access, I know that you just mentioned that, but a bit of clarity around it. So can you access that 50 grand should you need it, and then just pay interest on the full 300?
So your offset account will be your everyday transaction account. So you've got a key card, you can go to the ATM, pull it out. Keeping in mind, interest is calculated daily, charged monthly. Okay, so the longer you've got that 50 grand sitting in your offset account, the better the interest being charged at the end of the month is going to be a little bit reduced. Okay, so it's going to be charged on the 250 thereabouts. Okay, so best to not try and touch that 50 grand in your offset. Well, people tend to use credit cards, put all your bills on the credit card, and then pay all your bills come the end of the month. Okay, so just to maximise on interest saving.
Once again, all of this is advice or it's not necessarily advice, these are just conversations for you to make sure you're doing your research and understand the basics, but then when you make your own decisions, you make your own decisions based on your research 100%. And the best thing for yourself. And then a package home loan, I think we touched on that earlier. So that's having the best of both worlds, but you can't just have it
Correct.
say fixed for 5 years and then 2 years of variable, you've got to have it evenly spread out.
You don't have to have it evenly
Okay.
spread. Yeah, you can have 60-40 splits. You can do whatever. You can have 90% of it fixed,
Yeah.
and 10% of it variable. So really down to the individual and what they want to get. Some people set themselves goals. Right, if I put 50 grand variable, well, let's try and aim to knock that 50 grand down pretty quick, and then we'll leave the rest fixed in for a couple of years.
Okay.
ANZ have a break-free package. There's an annual fee, but then it covers all of your banking.
All right.
So you get annual fee, card fee waivers on your credit cards, offset accounts, free offsets. There's no loan approval fees. It's selected insurances you get discounts on. It's also good for for the investor as well. If they've got multiple loans, they're going to get greater discounts. So on your fixed rate, you'll get a 0.15 discount off the advertised rate, whereas the variable, you also get a large discount on the variable portion as well.
Okay.
So it's really good for a portfolio and a package that covers generally all your banking.
Yeah.
So it's generally all those accounts and whatnot. All the fees on that are waived, and then you just pay the one annual fee of $3.95 per annum.
It's pretty tempting.
Yeah.
Okay. So if we were to go through these rates that we've just discussed and try and, I know that it's going to be hard because it's circumstantial, and as we discussed before, it depends on the individual.
Yep.
But if I go through these and say, all right, standard variable rate, what type of property purchases does that suit?
It really does come down to the individual.
Yeah.
If you listen to the media and rate cuts and interest rates are going up, well, you're not sure which way you're going to go. So maybe the fixed rate option is good. So the good thing about that break free package as well is if we do set your loan up on a variable rate, okay, you can then come back to me and say, Trent, I now know what I want to do. I want to fix in for 2-3 years. I go, okay, no worries. I send off the request that it doesn't cost you anything. So there's no renegotiation fees. Okay, so it's all still covered under the break free package.
Okay. Now, LVR
Yep.
is an acronym that comes up a lot,
Certainly.
which is loan to value ratio.
Correct.
And I know that because I read something. I got very lucky and picked up my mouse and did some study before this interview. My apologies. I should have known it already. But so loan to value ratio, what is it, and then why does it matter?
Well, loan to value ratio, like I said, is an LVR. Okay, so generally comes down to your loan amount against the value of the property. Okay, we find that ratio and then determines what we can lend you. Okay, so let's say you've got a 20% deposit.
Yep.
Well, the bank will then lend you 80%.
Okay.
Okay, so when there's an 80% LVR, okay, there's no lender's mortgage insurance, which is great.
Yep.
There's no additional fees.
Correct.
Let's say you're a first home buyer and you've got minimal deposit, 5-10% deposit.
Which is becoming more prevalent nowadays.
It is.
It's difficult to say.
It is.
Yeah.
So if you've got a 10% deposit, obviously the bank will lend you 90%. Okay, now when we're up around that 90% mark, assessment is a little bit tougher, but there's just more questions being asked. Okay, the reason for that is there's more risk. There's more risk to the bank. Once approved, there'll be a lender's mortgage insurance. There's a premium. Okay, so it's the bank getting insurance as such on that money. Okay, reason being, if you default because we're at higher risk, the bank's insured for that.
Yeah.
Okay, so it really covers all parties.
Okay. But if we're to break it down then, and we'll do little diagrams on the screen at some point.
Yep.
So the house is worth 500,000, let's say.
Yep.
And then you've got your 20%.
Correct.
Then you're going to give 80% of the 500 figure.
Correct.
Okay.
Yep. So your loan amount then will be 400,000.
Yep.
And you've got 20% equity in the property.
And that gets parked in there, and then you will select from one of the packages that are available.
Correct.
Or one of the options that are available that suit you that may be fixed, or you can do one of those, or the offsets, and you can. With the offset though, that 20% is not included in that, is it? It's a deposit that's held by the bank.
Correct.
Okay.
Yep. So it all goes into the property transaction. So if you're purchasing a place for 500,000 and you're a first home buyer, well, great. There's no stamp duty for a first home buyer in Queensland.
Yep. On new property or all property?
All properties, there's
All
no
properties.
stamp duty.
Okay.
You still do have to pay, obviously, your transfer and registration fees and solicitors fees.
Yeah.
So you got to have those fees on top of your 20% deposit. So round numbers, you'll have 100 grand plus all your conveyancing and whatnot. So 105 grand in total, for example. The good thing with ANZ at the moment is we're advertising for the first home buyer, so we'll actually refund you $1,000 for your conveyancing.
Okay.
So we're trying to eliminate all those setup costs
Yeah.
for the first home buyer.
Because it's a challenge.
It certainly is.
Okay, excellent. So moving on now, we're going more into the personal sort of thought process and what it is you're doing, or how you advise people when they're trying to choose the right person.
Yeah.
So could you explain the process from start to finish for somebody who's looking to acquire finance to purchase a property?
Yeah, no worries. So I would come out and see you at your own home or somewhere where it's suited.
Yeah.
Sit down with you, really just map out obviously your goals again. Set yourself up, what you're trying to achieve. Talk all home loan products and whatnot. Sign an application. If everything's good, sign the application. We'll generally discuss at the appointment your personal details. How long you've been living here and whatnot. How long you've been in your job. Do you plan on having kids down the track, or what's the overall plan moving forward in life? If everything's good there, we take that application away. We get all your supporting documents such as driver's licenses, tax returns, deposits, savings, evidence of savings, and then we package up an application and we lodge that for assessment. Okay, the assessment timeframes could be anywhere from 2 to 3 days to 6 days. Okay, so they'll generally then come back and say, look, you're all pre-approved, subject to the following. Okay, so if you're purchasing, we're going to need a contract of sale. Okay. We may need to see further evidence of savings or whatnot. Okay, so there's a few conditions, and then we just work together and tick those off, and then send it back for full approval.
Okay.
All right. After that, once say we're all approved, the bank then issues loan documents. Okay, like a letter of offer. Okay, they can then take that away to get obviously looked at from their solicitor or whatnot, get some further advice
Which
on that.
would be suggested,
Correct.
as always, with anything.
Yeah, 100%.
Okay.
Accountant, whatever, solicitor. So once that's all signed, get backed, and then we push on for settlement. Okay, so really the clients don't have to do nothing with us. It's all handled by the banks and the solicitors after that.
Fantastic. And are there fees for you?
There are no fees, no setup costs. Okay. The clients don't pay us at all. ANZ pays us. Okay, so we're employed to ANZ and the bank pays us our wage.
Excellent. So what documentation then would you recommend people have ready? So because they'll have to ask questions of other people in their lives, their employer or their accountant or whoever's around. What are the key documents that they should already have their head around before they come and speak to you?
Pay slips. So if you're employed for somebody, pay slips, evidence of your pay going actually into your bank. So bank statements for the last 3 months. That then just confirms that your income's being received. Okay, we're not doing anything dodgy. That, or if you're self-employed, we're going to need your tax returns, all your financials and whatnot.
Credit card statements, I take it, to know where the money goes once it comes in.
Correct. Home loan statements. So we'll generally capture most of that in the appointment in our application, knowing all your assets and liabilities. Making sure there's no hidden credit cards or car loans that we're not aware of that we're paying. So we really need to capture all of that, and then obviously put that up to assessment as well. So generally just your income documents to start with. That way we can have a quick look at it and give you a yes or no really on the spot to see where you're at, and then talk about all your expenses and your living expenses and your day-to-day expenditure.
Are there any sticking points that you've noticed recently that have held up applications with the bank?
At the moment, it's just workflow issues. Given the break we've had at the moment, things are a little bit slow, just in that regard. Generally, if we can get everything to start with, everything we've asked for, generally it's pretty smooth sailing from there. Okay, assessment might have a few issues about your income or whatnot if it's outside the ordinary. Okay, but
what if people are getting Uber Eats too often?
For
example, because you read that a lot.
100%. Yeah, well, you need to declare that. If your grocery bill's $100 a month, but your Uber Eats is $500 a month,
then you're in a bit of strife.
Well, so we just need to document all that, and we'll capture all that when we get the bank statements for your PAYG applicants.
So careful with your expenditure. Once again, this is the largest asset that you're going to purchase.
100%.
Well, it's highly likely it's going to be the largest asset that you own. As with everybody in this room. So try and be as disciplined as you can when it comes to that expenditure, or your property portfolio is not going to grow as large as you want it to.
Yeah.
All right, so we've covered quite a bit now. I was thinking, when the purchase of a property occurs, the bank sends a valuer, I believe, to then get proof of what the value of the property is, because they can't take the contract on face value.
Correct.
Because maybe you're somebody who has got a really good deal and they'll be happy with that price, or somebody who might have paid a bit too much because you didn't do enough research, and the bank doesn't want to lend on that figure. So what's the difference between a purchase price and a bank valuation, and does it matter to the buyer in that instance?
The purchase price is the agreed amount that the vendor is willing to sell for, and the purchaser is willing to buy for it. Okay, so that's the agreed value. When it comes to doing a bank valuation, now let's say the valuation comes less than the contract price, well, the bank will only lend, say, 80% on that valuation. Okay, if the valuation is higher than the contract price, which is, you don't say that too often.
I'm not actually saying that.
Never seen that. So, so if the val's over the contract price, well, the bank will still lend 80% on the contract price. Okay, so you've agreed to that value, beauty, ANZ, or the bank will still lend you 80% on the contract. So it comes down to the lesser of the two.
Yeah.
Okay.
So do your research, have a look around in the marketplace and make sure that you're not overpaying. Or
a little bit different when you may be buying off the plan. Because they're generally unconditional purchases. So then if you buy something now, well, there's no guarantee it's going to be valued at that 2 years down the track when the property's built. So it could be, I'm not going to say consequences, but the bank, if it undervalues or overvalues, same again.
But they're not going to be pressured by timelines.
No.
So preparation, I take it.
Correct.
When do you want people to come and see you if they're going to buy a property?
First, before they get out there.
First thing.
Let's try and get you pre-qualified. That way you can actually go to the agent, say, hey, I know what I can spend, I know how much deposit I've got, what I can buy, I know the budget, and then you can look for properties that would suit.
Okay. I feel from a negotiation perspective that's also very important, because if you know your budget, then you know what you can pay and what you can't pay, and then it keeps you within a framework, and then you can start to speak to the vendor and get the price you think is fair.
We're there the whole step of the way. We'll assist you, speaking with the agents, we can recommend solicitors, we can assist you and pretty much hold your hand the whole way through it and make it life simple for you. Okay?
Excellent.
So we come out and see you on site if need be to sign an application.
Hence the mobile.
Hence mobile.
Okay.
So, and we're pretty, we're 24/7. So the phone's always on. You got any questions? Feel free to shoot me an email, give me a call, shoot me a text message. We'd like building that rapport with all the clients.
And you guys are all over the country?
We are. ANZ's all over the country.
ANZ, the mobile lenders are?
Correct. So we here on the Gold Coast cover quite a large area. So I think we cover from Miami, Burleigh, all the way up to Mrkts, Ascot Way. So it's quite a large.
That is
large
a big
area.
patch.
So we've got, I think, 4 or 5 lenders that covers the Gold Coast. So we're starting to tread on each other's ground now. We're starting to grow and get out there, which is good, and people start to know us. So you'll probably see a few of those little ANZ cars getting around.
Good.
Around town.
As long as I'm happy to hear that it's independently owned. Because it basically just means that the bank has the ability to lend money, but you guys are working for yourselves and not really under the thumb of anybody else.
Correct.
Which is important.
And for the client, like we're here to get a deal done for the clients.
Correct.
And get the best product.
Excellent.
And right.
Trent, thank you so much for your time.
Thanks,
it's been a real pleasure. Thank you for coming in. I hope that video was informative. There'll be a lot more to come, and watch this space, and we'll try and get Trent in over time to keep learning about what the market's doing and what the banks are doing and why that's important for you. So we'll see you very soon. Thank you very much.